It's Wednesday the 7th of August. We're going to take a look at stock indexes ahead of the US Open and what's going on with the dollar yen and the recovery that seems to be continuing from Monday's kind of wild moves. So the recovery that we've seen since Monday was really helped last night or in Asian trading by the central bank deputy governor in Japan giving a really strong signal, a dovish signal, by pledging to not hike interest rates when markets were unstable. And that has calmed the market quite a lot. It made the yen weaken more. In fact, 2% move in the dollar yen is quite a move, really, and that's what we got this week. Obviously, there are really big spikes going on at the moment, but it seems to have calmed the market, and everything is calming down. But let's take a look at the levels and where we are, because this kind of Japan pledge, I'm not sure that it's that helpful. Basically, they're saying as long as everything, risk assets and stocks keep going up, they'll keep hiking, and they'll only not hike if the market is unstable and we get nasty volatility. So yeah, it's like a little bit of a cap on those assets, isn't it? Now that, I suppose, depends whether you believe that all of this volatility that we saw at the weekend and on Monday was due to the carry trade unwind. You know, if we take a look at the VIX, this is the S&P, we had not seen, you know, a spike in the VIX like we saw this week since 2020, which is the start of COVID, and certainly not like in one day. And we are all the way down from 65 to below 25 in this market. And the problem is that when you have like 3 years of in a very narrow range and going lower and lower, then the bets that low volatility will continue pile up. And so I think what we have seen is a really big clear out of those bets, which will help. So I think we could stay stable for a little bit longer. You know, there are lots, there's no one definition of the carry trade, and there are lots of ways that this trade is undone. And whilst we may not see a big spiky move in the markets like we saw on Monday, the flavour going forward means that the range of that carry trade is going to come down as the rest of the world continues to cut rates while the yen continues to hike rates. So that will get smaller and smaller. So overall, we see what's going forward, and we will see whether this unwinding of this trade from now on becomes more orderly or whether we go back into a really nasty zone. Let's take a look then at this S&P first of all to start off with. Well, let's look at the E-mini futures, because on the monthly, clearly, this is turning into a pretty nasty 3 candlestick pattern. If we look at where we are though on the weekly, we are underneath the weekly 20 moving average, and the weekly 20 moving average in an uptrend for the S&P is really nice support. And when we get underneath it, it's really solid resistance. And usually the first time back to it, we don't kind of blast back above it. You can see here, last summer, August, exactly where we are now. It was support, we bounced off it. When we got underneath it, it was resistance, and we continued lower as long as we couldn't close back underneath it. So we are at a pretty interesting, we've bounced on this weekly then back to really pretty important resistance. It's also not just rather dynamic resistance like a moving average, but if we look left to the March highs, this is also pretty solid support and resistance horizontally speaking at 5,300, and it's also the bottom of the gap. So we had the gap on the Monday open. Now we are going sideways underneath that gap, and the gap was where we could not close above when we tried yesterday. Are we going to break above it today and continue higher? Yeah, let's see. At the moment, this is kind of sideways consolidation. We're building a pretty nice bottom, but we could end up, making a wave 4 here and continue lower. But I do think that if we close above this support and resistance level, we could see a much bigger move higher to retest these daily moving averages from underneath in the middle of this range, and kind of perhaps back to these lows first, which was a big kind of 5,430. This bottom of this gap here and these swing lows is quite an interesting level to have as a next target. And then I think from there, the next kind of support and resistance level we should be aiming for is like the top of this gap that we had previously, and that would put us back into these daily moving averages, and we'll see what happens there. These daily moving averages, particularly the 50, are quite important support and resistance. So that's where we are. Although we had some pretty bullish news overnight in the futures, we have not been able to lift back above that important weekly 20 moving average, and unless we do, there is a little bit of a risk that we go sideways, and therefore at the top of the range are looking like perhaps another little bit of a bigger pullback here. So key resistance 5,326 for me. If we take a look where we are in the NASDAQ, remember the resistance that we were talking about. If we look at the weekly in the NASDAQ, we're in between our weekly moving averages, but we are back testing this big 236 fib level that comes from the lows in October 2022 to this high. Again, this is also a horizontal support and resistance level at 18,500, and that's where we are sideways. That's the level we need to get above if we're going to see a bigger recovery in this NASDAQ. And at the moment, we're just kind of sideways in this little range. We do have really good support in this NASDAQ from the daily 200 moving average. And if we get back above this 18,500 level, I do think that we will see a bigger recovery back to the middle of this range and back into those daily moving averages. How would I trade it? Well, if we break out higher here, I really like a 4-hour setup, and I use Heikin Ashi. So, you stay in it until it goes red or it stops going up, basically. And that's what I'm looking at. So the 18,500 is the key resistance. Where have we bounced back to in the DAX? Let's take a look at these on the bigger time frames, because in the DAX, again, we had this really nice bounce from the weekly 50 moving average, pretty good. We've got this horizontal level here from these lows, and the gap here in the DAX, you can see, here's our double bottom support level here at 17,600. I think above 17,600 we could see a bigger recovery, but so far this has been a little bit, it's not so cool, is it? Like, I kind of want to say because of the fib retrace levels that we've got more upside in this one, but this horizontal support and resistance is winning. So 17,569, if we get above this, we can talk about back into the middle of this range and the daily moving averages in the DAX. And at the moment, it's a little bit muted, this recovery. So let's take a look at this FTSE. If we go to the weekly in the FTSE, again, we're right back at these previous lows, and we are right back at the weekly 20 moving average. Previously, really good support, when we've tested it in a really good trend guide when we are in a very nice uptrend. Now we are underneath it. Is it going to be resistance? We are right at that level as we go into the open here. And if we look in terms of support and resistance, we are at a pretty tough level here with these previous lows in this sideways range where we had a false breakdown underneath at 8,118. I think if we get above this, it will confirm this is a very nice three-wave correction, and we'd be looking for more upside. We could even kind of draw it as a little bit of a flag pattern channel like this. Actually, let's do it more. And our next target would then become the kind of would become sort of the top of this channel, something like this. Sometimes you have to play around them to fit in, but that's really where we would be looking for. So, nice recoveries, but everything in these stock indexes that are a really interesting resistance level that we really need to recover if we're going to keep going higher. Let's take a look at some other indexes, because obviously the Nikkei, I love that announcement. If we take a look at the ASX, the Australian Stock Exchange, we're back at a really interesting support and resistance level. In this one, we're underneath the weekly 20 moving average, which has previously been really good support. And this is shaping up as potentially a really nice weekly candle. I have to say that this one has recovered pretty nicely. Maybe that's just because of Asian trading. And I do think that this one is headed back to the middle of the range. My fear with this ASX, when I look at it, most corrections are 3 or 5 waves. So this was a very nice 3 waves and we continued higher. Each one of these is 3 waves, and this has just been one drop in a straight line. So I'm a little bit worried in all of these indexes that with this sharp drop in a straight line that we're just going to recover back and to another level, and we see another leg lower before this is over. So more upside, I think, and the big kind of easy target for the upside in this ASX is going to be this daily 50 moving averages previous swing low and this level here around 7,800, 7,840. In the Toronto Stock Exchange, again, the recovery in this one has been really muted. We're well underneath these daily moving averages, and what's capping us in this, just like all of these other indexes that we look at in the Toronto Stock Exchange, we're being capped by this weekly 20 moving average again, which has previously been pretty interesting support. And if we pop above this, we should see a bigger bounce as for me, a really good level that I'd be looking for, which would be like the middle of this sideways, this swing high, this swing low, and like 50% of this weekly candle back somewhere in the middle around 22,500 will be where we can reach if we can get above this 20 moving average on the weekly. But if we can't, we're stuck underneath, and we could see a big pullback retest of the lows. So we're still at a little bit of a risk of that in this TSX. Let's talk about the dollar yen, which of course was the bigger driver of this all. Well, that news from the Bank of Japan really helped the dollar yen bounce off. As you know, if I go to the monthly, as you know, we're bouncing from a big 236 fib level, which comes all the way back from the 2012 lows in dollar yen, from 2011 lows, sorry, in dollar yen. So this is a big 236 fib level at 141. It's also this previous swing low here on the monthly. So we've had a really nice bounce from this 236 fib level. And now we have gotten above a 236 fib retrace level going the other way from this high. That usually points to more upside. I would expect a wobble here at this 38.2. And I would expect this 50% and a back test of this daily 200 moving average, which is where all our moving averages are at 151.80 next. However, it could be one of those daily, you can see here with this sideways range here. To do that, we really need to close and hold above this 236 fib level rather than just be a false breakout and come crashing all the way back. So 146.45 then becomes really important support and resistance to watch for a daily close above if this is going to keep going high. So far, if we look at it on lower time frames like this 4 hour, you can see it's worked very nicely. It was resistance and now it's support, and so we need to keep going higher. But if I go down to the hourly, you can see that so far we're about to do another swing low of this correction. We really need this to hold at 146.45 if we are going to keep going higher here, and this not just be a false breakout above this level with a daily close back underneath and a long tail. So we can see this 146.45 also, if we project left here, is also, you can see from this, we go all the way back left. This is quite an interesting level for this market. So 146.50 needs to hold above in dollar yen if we're going to keep going higher. And if we get stuck and close back underneath it, we're also at a really important resistance zone in stock indexes. So watch out for that.